Hello, good evening, everyone. Labiba and Zainab and Vanisha. Please confirm if I'm audible to all of you or not.
Yes, sir, you're audible.
Yes, sir.
All right, everyone. Thank you so much. All right, Vanisha, is this your first class?
Yes, sir.
Okay. So could you please tell me what are the different chapters you have already covered? Have you covered anything in accounts until now?
Sir, the first chapter, sir.
First chapter, what it is about? Sorry, introduction to the introduction to accounting. So then I guess you at least have the idea about the asset and liabilities.
Yes, sir.
All right then. So all right, Vanisha, Labiba and Zainab. So see, we have already completed 2 chapters in our syllabus. One of which was the introduction to accounts, and then after that we have started one chapter which is called accounting equation. We just finished that chapter in the previous class. And the agenda of today's session is that we will be starting a new chapter. The name of this chapter will be, the name of this chapter is rules of debit and credit. So we will be starting our session with the new chapter today. And since you have missed few classes, Vanisha, like you completely missed the accounting session and introduction of accounts as well. So there might be some problem understanding this particular chapter, but I'll try that you don't have to face a lot of problem understanding anything in this chapter. All right, so let's just start with the session. So first of all, the name of the chapter that we are starting is rules of debit and credit. This is the third chapter as per our syllabus, and in this chapter we'll try to first of all we'll try to understand the meaning of the ultimately we need to understand the rules of debit and credit in this chapter, but we won't start this chapter from the rules of debit and credit. Instead, we will first of all try to understand the meaning of the accounts and what are the different types of accounts. All right. So because unless and until you have the idea about the different type of account, you won't be able to understand those rules. So in order to understand the rules of debit and credit, we must have the idea about the accounts as well as the what are the different types of accounts we have. So let's just start our session with the meaning of accounts first of all. Just a moment. Meaning of account. See, the account is different from accounts. We're not talking about accountancy. We'll try to understand what is account. What is account? What is an account? So account is what? Just a moment. Yeah, okay. So account is what? Account is you can define account as the summarized. So account can be defined as a summarized record. Can be defined as a summarized record of similar transactions at one place. Similar transactions at one place. Like in the previous session, I've already told you that in a business, there are various activities, various transactions take place over the period of time. Like if you talk about, let's suppose there is a business called XYZ Limited, and throughout the period of 1 year, XYZ Limited have undertaken various transactions. Various transactions have taken place in the XYZ Limited, and these transactions are related to different items. These transactions are related to asset, liabilities, expenses, revenue. There are so many transactions, and all these transactions are related to different items. Like there are transactions which deals with the sale and purchase of goods, transactions which are related to like the sales transaction and the purchase transactions are there. Then XYZ have also undertaken transaction related to purchase and sale of building, the furniture, payment of salary, wages, interest. All these are what? These are all transactions that that XYZ have undertaken over the period of time. Payment of interest, receipt of interest, dividend. All these are different transactions, right? So in a business organization, throughout the period of 1 year, business organization has to undertake various kind of transaction, and these transactions are first of all recorded in the book of journal entry, in the book of journal entries. And after that, after recording it in the journal entry, we need to classify all the transaction into different account. So while preparing, so why do we prepare account? We prepare accounts so as to classify all the transaction, all the similar transaction at one place. Like for example, we have undertaken various transaction related to sales. So by preparing a sales account, I can summarize all the transaction relating to sales at one place. This kind of account will be formed by the name of sales account, and whatever the sales XYZ Limited have undertaken over the period of time, over the period of 1 year, all the transaction related to sales can be written under this account. And similarly, we can prepare a separate account for the purchase as well. That will be called purchase account. Why are we preparing the purchase account? Just to summarize all the transaction relating to purchase at one place. So what does the account do basically? Account basically summarize all the similar transaction at one place. Similar transaction at one place by preparing a different account for that transaction. Now, for example, if we have purchased various building and sold various building over the period of time, so to identify, to determine the total amount of building that have been sold and purchased over the period of time, we can separately prepare a building account, or we can also prepare furniture account. We can also prepare rent account, wages account. All these account can be formed. Expenses account or the revenue account. So thing that I'm trying to explain here is that account is what? Account is a summarized record of all the similar transaction at one place. It would be extremely difficult to trace the transaction relating to sale in the journal entry. It would be extremely difficult for you to find out how much goods have been sold over the period of time, what amount of goods we have purchased over the period of time. If we go through the journal book, it will be extremely difficult for you to determine to identify each and every transaction relating to sale going through the entire book. In the journal book, we have recorded all the transaction at one place, and it will be extremely difficult to find out the sales related transaction in the journal book, because journal book contains every transaction at one place. So what we are trying to do, we are classifying the transaction related to sales at one place so that it will be easier for us to trace the value of these sales. It will be easier for us to identify and track the value of sales over the period of time that have taken place in the XYZ Limited. So that is why accounts is useful. Account basically summarize a record. Account is basically a summarized record of all the similar financial transactions at one place, and that one place is called account. Right? Everybody, is this clear? Yes or no?
Yes,
The
sir.
meaning of account is clear.
Yes, sir.
Okay. Then there are different types of account. Nobody has to write anything. Just try to understand everything, and then I'll give you separate time, some additional time to note everything down. Moving on to, sir, what are the different types of accounts we have? See, accounts can be broadly classified into two categories. There are two approaches to classify the account. types of account. Types of account. It depends upon the approach. There are two approaches of classifying the accounts. Accounts can be defined, can be classified on the basis of modern accounting approach. There is a modern accounting approach to classify different types of account, and then just a moment. Then we have the traditional approach of classifying the accounts. Traditional approach and as well as the modern approach. Traditional accounting approach. So as per the modern accounting approach, we have classified the accounts into five categories. As per modern accounting approach, we have only 5 types of account. What are those? First is the asset account. Account can be related to the asset. It can be related to liability. So it will be called liability account. Or it can be related to expenses. So it will be called expense account. Or the revenue account. Revenue is income. And then there is one more account which is called the capital account. So as per the modern accounting approach, we have only 5 types of account: asset account, liability account, expenses, revenue, and capital account. But when it comes to traditional accounting approach, as per traditional accounting approach, we have 2 types of account only. One is called the personal account. Personal account. And then there is impersonal account. Personal and impersonal account. And interestingly, impersonal account is further classified into 2 more categories. Impersonal is further classified as the real account and the nominal account. Real account. We'll understand all these different types of account one by one. You don't have to worry about the different types of account right now. Real account and nominal account. What I'm trying to explain here is that first of all, we started our session with the meaning of the account. Account is a summarized record of all the similar transactions at one place. But depending upon the different approaches of accounting, we have categorized the accounts into different categories. So as per the modern accounting approach, we have 5 types of account. An account could be related to the asset, it could be related to liability, expense, revenue, or capital. So asset account, liability account, expense account, revenue account, and capital account can be there. But as per the traditional approach, that is the old approach of classifying the account. So traditional accounting approach says that we have only 2 types of account. One is personal and then there is impersonal account. And impersonal is further divided into 2 parts, that is real account and nominal account. So which basically means that as per traditional accounting approach, we have 3 types of account. First is personal, then the real account and the nominal account. But as per the modern accounting approach, we have 5 types of account: asset account, liability account, expense account, and expense, revenue, and capital. Got it, everyone? Is this clear to all of you? Yes or no?
Yes, sir.
Yes, sir.
Yes.
Yes, sir.
Okay, then the personal account is also broadly classified into 3 more parts: natural personal, representative personal, artificial personal, which is not important as of now. We won't be covering all these points right now. So from at this point of time, you just have to you should just have an idea about the different types of impersonal account, which is real account and nominal account. Let's just, for the time being, let's just skip the different categories under the personal account. As I'm saying that personal account is also broadly divided into 3 parts. Personal account include the natural personal, representative personal, artificial personal, but that is not relevant for our discussion currently, so we won't go into that. All right, so before moving forward, just want all of you to note this down, starting with the meaning of account. Everyone, please start writing this and just let me know as soon as you are done, and then we'll move to the next slide.
Sir, I'm done.
Done, sir.
Done, sir.
Please note this down as well.
Sir, I'm done.
Done, everyone else?
Yes, sir.
Yes, sir.
Note this down. Done.
No, sir, I'm writing.
Okay.
Yes, sir, I'm done now.
Yes, sir. Done.
Done. Okay. All right. So, let's start with a question. And in this question, we will just classify the different types of items into different account depending upon their nature. You will have to decide which item will be falling under the which category of the asset, which category of the account, sorry. And you need to you need to classify different item as per the modern accounting approach. All right. So let me show you the question. Okay. So this is the question. The question is saying that following accounts are being maintained in the books of Shri Ashok and classify them under the asset, liability, expense, and revenue. So we have different kind of account here, and we need to classify. We have different items here, and we need to classify all these items into different categories depending upon their nature. We need to identify whether these are asset, liability, expense, or revenue, and based on based on the identification of the item, we will classify into different account as per the modern accounting approach. All right. So for that, we will have to make a format. Just a minute. I'm solving this question for you, and I'll give you one more question, a similar one, so that you could also try. The solution to question number 1. This one is a very simple question. Just a minute. So we'll write down a statement showing classification of different items. As per modern accounting approach. And as per modern accounting approach, we have 5 types of accounts. So in the first column, we'll write down items. And as per modern accounting approach, we have 5 accounts, like first of all, the assets, right? Then liabilities, then expenses, right, everyone? Then we have revenue, and one more account is there, which is capital account. All right. So the first item in the question says, first item is land. Tell me, everyone, land is what? Land is an asset, liability, expense, revenue, or capital. Under which category land will fall into?
Asset or maybe capital.
Sorry, one by one. Just a minute. Yeah, Vanisha, please tell me land falls under which category? Assets, correct. So it is an asset. So we'll go to the asset account and write down the value of the land under it. Land. All right. Next is.
Sir,
Next we
can I
have.
ask something?
Yeah, please.
Sir, is it like we just have to, the options you gave, right, land, building and everything, we just have to write it under different categories? That's it. We don't have to, like, write in a way, like, this affects that one, this affects that one, as we used to do before.
No.
This one
No.
is different.
No, we are not doing that right now. We are just trying to identify which item falls under which category of account. That is it.
So we're just going to write it. That's it. Nothing else we have to do with it.
Yeah, nothing else.
Okay, sir.
All right. Okay.
Yeah, it's clear now.
Okay. Now moving on to the next point. Then we have building. Building also falls under the category of the asset. So
Asset.
we'll write the value of the building under the asset. Buildings. I guess we don't have to draw this column. Item is not useful. Then the third is salaries. Tell me, salaries are what? Salary are asset, liability, expense, revenue, or capital. Salary, Labiba, could you please tell me salary is what?
Sir, it is a revenue.
Salary is a revenue. Salary, as in you are paying salary. If you are paying
It's an
salary,
expense. Yeah.
it's an expense.
No.
Obviously. You will have to think from the viewpoint of the business. So if it is written that salary, so we will presume that salary is being paid, and salary, if it is being paid, so it will be considered as an expense. So therefore we'll go to the
Yeah.
expense account and write down the value of the
Sir,
salary
if
under the
nothing
expense.
is written, so basically we are paying the salary. We're never getting the
Yeah,
salary in account.
correct. No, we get the salary, but see, most of the questions are dealt from the viewpoint of the business organization, and business organization does not receive salary. Business organization have to make the payment of salary. So salary is obviously, in most of the situation, it is an expense, unless and until it is otherwise given in the question. I hope it is
Sir, I
clear.
thought from the other way. That's why I said revenue.
All right, no issues. Now it is clear, na?
Yes, sir.
All right, tell me about the debtors. And I just want to ask this from Vanisha. Tell me, what are debtors? Debtor is an asset, liability, expense, revenue, or capital.
So liability.
It's a liability. Okay. Zainab, do you have any idea what are debtors?
Yes, sir, I think liability.
Liability. Labiba?
Sir, about the terms, it is the liability itself, I guess.
All right. So in this case, all of you are incorrect. See, what are debtors? Debtor is, see, whenever we sell goods to someone on credit, whenever goods are sold on credit, the person to whom we are selling goods on credit is known as debtor. Like for example, let's take an example here. Suppose XYZ Limited is selling goods to some person. So this person is buying goods from XYZ Limited. Goods sold for rupees 50,000, and this goods has been sold on credit. Right. So the person who is buying the goods on credit is considered as a debtor from business organization point of view. He's a debtor. So debtor is obviously, it is an asset for the organization, for the business. Debtor is what? Debtor is an asset. Always remember that. And like for example, if XYZ Limited bought goods from the supplier on credit, at that time the supplier will be the creditor. Let's suppose if XYZ Limited is buying goods on credit, on credit, buying goods on credit increases a liability upon us. It is a liability. And whenever you buy goods on credit, there will be increase in the value of the creditor. The person from whom you are buying goods is a creditor, and the person to whom you are selling goods is the debtor. And whenever we sell goods on credit to some other person, that is a debtor, and debtor is obviously, it is an asset. Creditor is a liability, debtor is an asset. I hope it is clear to both of you. Zainab, Labiba, and Manisha as well. Manisha, is it clear? The debtor
Yes,
will
sir.
fall under
Yes,
the value of the
sir,
asset.
this thing was
Yes, sir.
clear, but for this thing, no, the debtor is the asset for the business point of view.
Yes, debtor is the asset from the business point of view.
Okay. So we have to, in
Since
this, all the
business,
questions we
see
have
why
to
it is
go.
an asset, since business has to recover certain amount of money from a particular person, na?
Yeah.
And because business is in a position to recover the amount, so that therefore it is an asset for the business. And if business is required to make payment, then in such a situation it will be treated as a liability upon the business. All right, moving
Yeah.
on to the next one.
Sir, I thought the other way. In all the questions, we have to think from the business point of view.
Yeah, every time you have to think from the business point of view.
Okay.
All right, now now see bad debt. Bad debt is what? Bad debt is a, see, whenever a certain amount of debtor is not realized. Like for example, I have sold goods of rupees 5,000 to Labiba. Right. Goods I have sold to Labiba for rupees 5,000, and Labiba Labiba should actually pay 5,000 to me, but instead she have only paid 3,000, and she have made a default in the payment of 2,000. She did not make the payment of 2,000 owing to any reason. She is not willing to pay, or she somehow is not in a position to make the payment of the remaining 2,000. So that means upon Labiba, I have a due of 5,000, and Against that, I'm only able to recover 3,000 and remaining 2,000 is still due, and which Labiba is denying to pay. So that is considered as a bad debt. Debtor which is not realizable, amount that is not realizable, party have made the default in payment of the debtor is considered as the bad debt. For example, let's suppose I lend 10,000 to Zainab, and Zainab, instead of returning back 10,000, she only gave 8,000, and she made a default in the payment of remaining 2,000. So the default that is being made in respect of 2,000 will be considered as my bad debt. And bad debt is obviously a loss. It is an expense. Bad debt is what? It is an expense. It is a kind of loss. So any loss or expense will be covered under the expense account. This will be written under the expense. So bad debt is an expense. So we'll be writing that under the expense account. Got it, everyone? Is this clear? Yes or no?
Yes, sir. Now it's clear.
Yes, sir.
Yes, sir.
Okay. Moving on to the next item. Next is depreciation. So what is depreciation? Depreciation actually means reduction in the value of an asset over the period of time. Let me explain this through a small example. Let's suppose I have bought a machinery. I bought a machine in the year 2020, and the price, the value of that machine in the year 2020 was let's suppose it was of rupees 5 lakhs, right? The value of the machine in the year, the on the date when I bought it in the year 2020, it was of 5 lakh. But the current value of the machine, tell me, the current value of the machine will increase or decrease? Same machine will cost me
Decrease.
decrease, right? Over the period of time, the value of the machine will decline. Now the machine actually is of rupees 3 lakh only. If I go to the market and sell this machine in the market, I'll be able to recover only 3 lakh. Machine, actually I bought this machine for 5 lakh, but the current value of the machine will decline by 2 lakhs. So the reduction in the value of the machine, reduction that have caused in the value of the machine due to the passage of time, due to the use of machine, due to the wear and tear of the machine. Because during the, let's suppose, starting from 2020 till 2022, I must have used this machine, na? And during the usage of this machine, this machine there must have caused some wear and tear. So because of the usage of the machine or passage of time, the value of the machine must decline over the period of time. And decline in the value of the machine, decline in value of the asset or the machine over the period of time is known as what? Is known as depreciation. What do we call it? We call it depreciation. So in our example, I have bought a machinery for 5 lakh and now the value of that machine is only 3 lakh. That means my machine have depreciated by 2 lakhs. The value of the machine have declined by 2 lakh. Got it? So depreciation
Yes,
is
sir.
the
But
reduction in the value of the asset over the period of time due to the usage of the machine, due to the passage of time, due to wear and tear, or due to any other thing. If the value of the asset is declining over the period of time, that will be considered as the depreciation. I hope it is clear to you.
sir, it
And
is clear, but it also happens like if we buy a land or something, and over the
yeah,
period of time, the value of it will increase. Like, if we buy a land now
perfect,
and
very
after
good.
few
Good
years,
point. Good
yeah,
point. Very good point, Labiba. See, land is the exception. Land is obviously it is an asset, but in case of land, there is an exception of the depreciation. Depreciation does not apply upon land since the value of the land increases over the period of time. So land is such, it is one of the asset which does not follow the rule of depreciation upon land since the value of the land increases over the period of time. So we cannot say the value of the land is declines, or we cannot say the value of the land is depreciating over the period of time. Right, that is a good point. Land depreciation does not apply on the value of the land. Value of the land increases over the period of time. But apart from the land, upon most of the asset, the rule of the depreciation applies. That means in case of most of the asset, the value of the asset declines over the period of time. And since the value of the asset is declining, it is obviously an expense for the business. It is an expense for the business, and therefore it will be recorded under the expense account. So depreciation will be written under this account. I hope it is clear to everyone.
Yes, sir.
Yes, sir.
Now moving on to the next item, freight. Freight is basically payment on purchase of goods. How can I define it? It is a kind of transportation cost. You can understand it that way. Like if you have bought a good from, let's suppose, from a market, and you ultimately have to get this good delivered at your residence or at your office place, so you will have to incur some transportation cost. So transportation cost regarding the transportation of goods from one point to the other point, from point A to point B, whatever the transportation cost you are incurring, that is called the freight. All right, so freight is what? Freight is also an expense, therefore we will be writing it under the expense account. I hope it is clear, everyone. Freight is a transportation, or you can also call it a delivery charge. It is a delivery charge or a transportation cost. Sorry, Labiba, you're trying to say something?
It's no, yeah, I'm saying it's confusing. I'm not able to understand.
You're not able to understand this. See,
Can you explain this thing
yeah,
again, the
no
price
problem.
thing?
See, let's suppose there is a market and you need to, and there is your factory, right? And there is a distance of around 10 kilometers between the market and the factory. You need to buy raw material from the market, right? You need to buy raw material for production of a particular good in the factory. And you have, let's suppose you have bought goods of rupees, you have bought 100 kg of raw material. All right, and the price of that raw material is 50 rupees per kg. So the total amount of raw material is 5,000, right? But you will have to bring that raw material from the market to the factory, right? So for bringing that raw material from the market to the factory, you will have to incur some transportation cost. You will have to make payment of
Yes.
you will have to pay the delivery charges. You can call it that way, delivery charges. So let's suppose you have hired a particular transport company, and they are saying that they will be charging, let's suppose, 1,000 for transporting goods from market to your factory. So this 1,000 that you are paying is considered as a freight, right? And freight is what? Freight is a transportation cost, and cost, because it is a transportation cost, so obviously it is an expense for you, yes or no?
Yes.
So therefore, because freight is an expense, so we will write it under the expense account.
Expense.
Got it? I hope it is clear now.
Yes, sir, that's clear. Sir, what about the in we call on the cafeteria and restaurant, and then we order food, they take us delivery charge if we don't go there. Is that a freight for us?
See, from the individual point of view, it won't be appropriate to call it as a freight. We use this word from the in context of the business only. For an individual, it would be better if we call it a delivery charge only. But if you're running a business and someone is charging for delivering a particular product to your premises or a factory, then it will be considered as a freight. Freight is not appropriate for the individual. Got it? Is this clear?
Okay, sir. Yes, sir.
Now, see, moving on to the next point. Next, we have goodwill. Anyone have any idea what is goodwill? Manisha, do you have
Sir,
any
the
idea what is goodwill?
Okay.
Manisha, sorry.
No, sir.
No. Zainab, any idea what is goodwill?
Sir, can I?
Sir, I think assets.
It is an asset, obviously, yes. Labiba, you want to add something?
Yeah, sir, I was saying it is basically the amount of respect or maybe the trust built in the society by a certain firm. And yes,
That
it
is
is an
right.
asset.
Yeah. See,
That's an asset.
goodwill, Vanisha, goodwill is, if we talk about the meaning of the goodwill, goodwill is the name and reputation of a particular business in the market, right? Because if a business is operating for a longer period of time, then business over the period of time earn some name and reputation in the market, and that name and reputation is considered to be a goodwill. And goodwill is considered as an asset, even though goodwill is not it is not a tangible asset. It will be considered as an intangible asset, right? So goodwill is an asset, but it is an intangible asset. Everybody, is this clear? Manisha, is this clear to
Yes,
you?
Yes,
sir.
Yes,
sir.
Yeah, okay.
Yes, sir.
So goodwill is why it is an intangible asset, because goodwill do not have any physical existence. Goodwill is not something that you can see or touch. It is just a name and reputation of a firm in the market. And name and reputation is obviously it is an asset for the business, because because that allows a firm to generate extra amount of profit. Every firm that have name and reputation in the market, they are in a position to charge super profit. They are in a position to charge extra price. And therefore you can notice now, Apple, whenever Apple introduces their new phone, they every time they are in a position to charge extra amount for their phone. Why? Because of their goodwill in the market, right? So goodwill is the name and reputation of a firm in the market, and owing to which a firm will be in a position to charge some extra amount for their product. And because they are in a position to charge some extra amount for their product owing to their name and reputation in the market, therefore we are calling goodwill as an asset for the firm. So goodwill will be written under the value of the asset, under the column of the asset account. Then moving on to the other side of the question, it says that investment. Tell me, investments are what? Investment are also an asset. Everybody, investment is an asset. So we'll go to the asset account and write down investment under the asset account.
Sir, how is investment an asset? Can you explain this?
Yeah, sure. See, investment is an asset. Like for example, if there is a company XYZ Limited, like for example, XYZ Limited have spent 1 lakh, or let's suppose 2 lakh on, let's suppose on gold. XYZ Limited have bought gold as an investment. 2 lakhs have been spent on purchase of golds, or like for example, if XYZ Limited buying the shares and securities of other company, right? Debentures of the other company. These are all different kind of investment instrument. Or like for example, XYZ Limited have opened an account in a particular bank and made a fixed deposit of rupees 2 lakh, fixed deposit account. So what are these? These are not expenses of the business. These are all the investment. If firm is making, if firm is incurring 2 lakh rupees, if firm is spending 2 lakh rupees, and these are spent on any specific instrument, security, debenture, fixed deposit, all these will be considered as an investment for the business, since business is going to receive the benefit of such amount in the future. Sir, how it is different from the expense? Why we are not treating it as a simple expense? See, there is a difference between expense and investment. Investment gives you return in the future. Investment is something, any amount that you are spending, and you will be receiving the return on such expenditure in the future. That will be considered as an investment. And if you are spending any amount and you are receiving the benefit of such expenditure in the current period of time, like for example, you have hired an employee and you are making payment of salary for such employee. So this employee will be giving you benefit in the current period of time. This is not something that you will receive the benefit of such salary in the future. You're understanding what I'm trying to explain you here is that when 2 lakh is being spent on gold, share, debenture, these things are not going to give return to the business immediately. The result from these instrument will be recovered in the future. Let's say for the next 1 year period or 2 years period. But the payment of salary is an expense because the benefit of payment of salary can be derived in the current period only. This is not going to give you any benefit in the future. So therefore, when we make any investment, it is considered as an asset, not the expense. Got it? And therefore, we will be recording it under the asset
Yes.
account.
Yes, sir, it's clear now.
It's clear. Moving on to the next item, interest received. Now, this is very simple. Interest received. Tell me, under which account we will be writing interest account? Interest received. It is very much clear with the statement interest received. Tell me, Manisha, do you have any idea interest received? We are receiving interest. What do you think? Interest is an income or an expense or an asset or a liability or capital?
Capital.
Capital. Why it is a capital? Why do you
So
think it
we
is
are
a capital?
receiving.
Because we are receiving. And why we cannot classify it as an income? Why we cannot
Sir, is
classify
it
it
a
as,
revenue?
yeah, it is a revenue. It is a revenue, obviously. Interest is an income, right? Interest, because we are receiving income, so therefore we will be writing it under the revenue account. No other appropriate account is made for recording the interest. Interest will always fall under the receipt. It is a revenue. So we'll go to the statement and write down the interest received under the revenue column. Interest received. Got it? Is this clear?
Yes, sir.
Manisha, is this clear to you?
Yes, sir.
All right. Now we have the other item, bank overdraft. Bank. What is that? What is bank overdraft? What is a bank overdraft? So let me just explain this to you. Let's suppose that is. Let's suppose we are talking about Labiba. Let's suppose Labiba have a bank balance of rupees 5 lakh in her account. There is a 5 lakh bank balance is maintained in the Labiba's bank. But Labiba wants to withdraw 6,50,000 from her bank account. Sorry. Labiba wants to withdraw 6,50,000 from her bank account. Now, sometimes bank allows you to withdraw some extra amount from your bank account. Depending upon your credibility, depending upon your credit worthiness, bank allows excess amount to withdraw from your account. Like in this example, Labiba actually have an account balance of 5 lakh, but she wants to withdraw 6,50,000 from her account. Sorry. So whatever the excess amount that she is willing to withdraw from the account is considered as the overdraft. So in this case, Labiba wants to withdraw 1,50,000, which is in excess of the current account balance of her. So this is considered as the overdraft. So now tell me whether the amount that she is withdrawing, the excess amount that she is withdrawing, whether she will have to return it back to the bank or not. Sooner or later, she will have to return it back to the bank. Yes,
I will
of course.
return. I will return for sure.
Obviously, you will have to return this amount to the bank. So till the time you are not returning it to the bank, this will be considered as a liability upon you. This is a liability upon, since you will have to repay it to the bank. So therefore it will be a liability upon. So overdraft is a, you can say it is an authority. It is a authority that bank gives you to withdraw excess amount from your bank whenever you are in need of the extra amount than the account balance available. So every time you are withdrawing extra amount from your bank account, that will be considered as an overdraft, and that is obviously falls under the liability. So overdraft will be recorded under liability here. Overdraft, it is a liability. I hope it is clear, everyone.
Yes, sir.
Sir, I have a doubt, sir.
Yeah, please tell me.
Sir, so like anyone can take extra amount from the bank, or it is for some specific persons only?
See, overdraft is allowed specifically to the current account holder. There are 3 types of account, Vanisha. From the if we talk about the banking system, you can open 3 types of account. One is called the fixed deposit account, then we have the saving account, and then there is current account. So current account is generally opened by the businessman who is required to use the banking facility on a very frequent basis, and he needs to withdraw and make deposit on a regular basis. So if you are a businessman, you will open a current account, and only the current account holder, only the businessman will be allowed to overdraft, and that too depends upon his credibility, depend upon the credit worthiness of this person in front of the bank. So overdraft is not allowed to every person or every account holder. It is specifically restricted to the current account holder, number one. And the limit of overdraft also depends upon different person. Like for example, if I talk about myself, if I open a current account in a particular bank, maybe bank only allows me 50,000 overdraft at a particular point of time. But at the same time, if a very reputed businessman opens up a current account in the bank, let's suppose if Tata or Ambani or any other person opens a current account in the bank, obviously bank is going to allow him more overdraft facility. Maybe bank will allow him to withdraw 50 lakhs of overdraft at a particular point of time. So that is what I'm telling you, that current account holders will only get the overdraft facility, and not every current account holder get the equal overdraft authority. Every person will get the different overdraft facility depending upon his credibility in front of the bank. Or there are various other factors also that bank consider to allow the overdraft. Vanisha, is that clear to you?
Yes, sir.
All right. Now let's talk about the other item. We have the creditor. Creditor, as you all know, creditor is obviously a liability. So we'll go to the liability column and write that under the liability. Creditors. Then we have capital. Obviously, capital will fall under the capital heading only. So capital will be under the capital. Capital is basically the amount that businessman is introducing in a business at the starting of the business. That is what we call capital. We have motor vehicle. Tell me, anyone? Please tell me what motor vehicle is what?
Assets.
It is an
Perfect.
asset.
Perfect. Very good. Motor vehicle is obviously it is an asset. So motor vehicle. Next is wages. This one is very simple. Tell me wages what? Wages what?
Expense.
Wages are not asset.
Revenue.
Vanisha?
Ex-
No. Wait, see,
Expense,
wages are,
Assets.
guys, wages are salary, kind of salary. If you have hired a particular, if you have hired a labor, you will have to make payment to that labor, na? You will have to make the payment to that labor, yes or no?
Yes.
Yes.
Yes. So whenever you hire a labor, you will have to make the payment to such labor, and that the payment that you made to that labor is called wages. Just like if you have hired a technician or an employee or an accountant or engineer, for professional services you will have to pay salary, and similarly for the labor you will have to pay the wages. So salary, wages is similar to salary. The only difference is that salary is generally paid to the professionals and wages are generally paid to laborers. That is the only difference. Got it? So wages are just like salary. Salary is an expense, right? So wages will also falls under the category of the expense. Is that clear, everyone?
Sir, so she said right. Her answer was somehow right.
Your answer was right. Okay. All right. So I just didn't listen to your answer. Anyway, so moving on to the next point, we have the repairs. Tell me, this one is easy. Repairs.
Expense.
Obviously, it is an expense, right? Very good. Repairs. Done. This is it, guys. We have placed all the items into the relevant columns. So under the asset account, land, building, debtors, goodwill, investment, and motor vehicle will fall. As far as the liability account is concerned, we will have overdraft and creditors under it. Expense account will include salary, bad debt, depreciation, freight, wages, and repairs. Revenue will include only one item, interest received, and capital will include only capital. I hope this is clear to everyone. Manisha, Labiba, Zainab.
Yes, sir.
Anyone have any doubt? Labiba and Vanisha, do you want to ask anything? Any doubts?
Yes, sir. I have doubt regarding the overdraft one. Can I ask?
Yeah, please tell me.
Sir, you said no. I like you gave my example. Like I have this 50,000 dinar or maybe rupees in my bank account, and I borrowed extra 55,000 or 65,000.
Mm-hmm.
So then I have to pay them like the money back later on, right?
Yeah.
But there are like many people. It's like kind of loan.
Mm-hmm. Yeah, it is.
So many people.
It is obviously a loan. It is a short-term loan that bank
Okay,
has
so
given you, and obviously bank will be charging some interest upon that as well.
yeah, so there would be the proper, contract and stuff. So there are many people who take the money and then they don't return. They just, fly away and stuff, and then they don't get out. Is it like they would be like, it's like when you don't pay on a given time, the interest or something keeps on increasing. Is there something, or is it like you directly get fined?
Yeah, obviously. See, first of all, if anyone do not make the payment, that means he is defaulting. And if he is defaulting in the payment of the overdraft, that is going to affect his or her credit score, his credit worthiness in front of the banking system. All right, but if you are paying the overdraft after a certain period of time, you are provided, you basically a credit period is allowed, that whenever you are overdrawing from your bank account, you will have to return the amount within a specified period of time. Let's suppose you will have to pay back the overdraft within 30 days, 40 days, 6 months, 3 months. And if you have not paid the amount within that period of time, you will be imposed with a fine, penalty, and excessive amount of interest as well. Got it? So these are all the implication of the non-payment, or if you have made default in the payment of the overdraft. So it is obviously it is a loan that falls under the short-term loan from the bank. Got it? Labiba, is this clear to you?
Yes, sir. But sir, they will tell us like right at the time we are taking overdraft.
Yeah.
They will tell us all the information and
Generally what happens? So whenever you open a current account, a bank tells you that you have bank basically sanction a certain amount of overdraft to your account. That means bank at the very beginning, at the time of the opening of the account, only bank tells you that you have the ability to withdraw 30,000, 40,000, or whatever the overdraft will be allowed to you. That is already agreed upon at the time of the opening of the current account. And this may increase over the period of time depending upon the account balance you maintain in the bank or the credit worthiness you have in the banking system and etc. Got it?
Okay, sir. Yeah.
All right. So, Vanisha, do you have any doubt? You want to ask anything?
No, sir, I'm clear with it.
Everything is clear. Okay. All right, guys. So, I'm giving you one question for your homework as well. Just a moment. All right. Please take the screenshot of this question, both of you. You are supposed to solve this as your homework, and you need to classify these items as per the modern accounting approach only into the liability account, capital, revenue, and expense account only, and the asset obviously. Done with the screenshot, both of you?
Yes, sir.
Yes, sir.
Okay, I'm giving you one board question. Just a minute. Yeah, please take the screenshot of this as well. There are certain items that might create a problem for you, but at least I just want all of you to try this at least. Otherwise, I'll be helping you. I'll help you to solve this question in the next session. Please take the screenshot. Let me know when you are
Sir,
done.
we're done.
Done. Okay. All right then. So Vanisha and Laviva, this is it for today's session. We will continue from this point onward in the next class. We'll talk more about the accounts, different type of account, and yeah, in the next class probably we'll start with the account format, and I'll explain how account actually prepared, and then we will also talk about the various rules of debit and credit. Since we already understood the different type of account, now it will be easier for us to understand the various rules of debit and credit. And if time allows, we will also talk about the traditional accounting approach and various rules regarding that as well. So this is it for now. We'll see you in the next class. Thank you so much for attending the session. See you in the next class. Till then, take care. Goodbye. Allah Hafiz.
Thank you, sir. But can I
Bye.
get the recording of the last class which I missed? I was not
Laviba,
able
you'll
to
have
attend
to you'll have to get in touch with your coordinator. Or it's, I don't
I
have the
asked
record.
it to him. I said to him already.
He will only be providing you the link of the previous class. I don't have the link available. You'll have to get you will have to talk to your coordinator only, counselor only.
Okay, sir. Then I will drop the message again.
Okay. All right. If it does not help, then I'll tell me in the next session. I'll try to do something. All right. You can
Okay,
now
sir.
leave the session. Thank you so much, Vanisha and Laviva. Goodbye. Take care.
Thank you, sir.
Thank you, sir.
Hello. Good evening, Shifa. You there?
Good evening, sir.
All right. Good evening, Shifa. We'll wait for Zainab to join in, and
Okay.
we'll start the session in 5 minutes. And meanwhile, let me change the PowerPoint as well.